All right. Hey, everyone. This is Kirk here again at Option Alpha, and welcome back to another workshop this week. I think we got a good one for you guys. We're going to go through the new trailing stops that we have included in 1 minute exit options. Plus, we're also going to go through something new called bid-ask spread guards. I think this one's going to be a fun one because it's going to show you how you can do a lot of cool things inside of exit options. You guys have all loved exit options. So we're just going to keep expanding them out as much as possible. And the latest update that we just released this week blew it up with a lot more functionality. So I want to go through a lot of that with you guys so you guys have an idea of how you can use these and how they work, go through multiple examples, show you some ones from earlier today on just a demo bot that I had built that just kind of goes through a lot of these. Okay, so here's what we're going to do. So first things first, for today's workshop, we're going to review how trailing stops, basically what we call smart stops. Some people still call them smart stops. I still like personally calling them smart stops, how trailing stops work for positions on Option Alpha. Then we're going to introduce and walk through the new 1 minute trailing stops for exit options. Then we're going to introduce the new bid-ask spread guard. We're going to kind of do this all as we go through this process today for exit options. We're going to walk through multiple real-time examples. We're going to set some trailing stops today on positions. So there's some positions that I currently have that I opened this morning that have trailing stops on them. Then there's other positions that don't have trailing stops. So we're going to do both. We're going to look at ones that already triggered and are done. We're going to look at ones that are active. We're going to look at ones that don't have any, and we're going to set them. So we'll do all of that today. And then, of course, we'll show you how you can save exit options as presets so that what you can do is you can save these and reuse them over and over and over again. So as always, we try to help you guys set it once, then you can reload those exit options as a preset and then keep going from there. So here's how a traditional trailing stop works. And by the way, you can still use a regular stop loss order, right? If you want to, you can kind of pseudo set up your trailing stops the way that we do it at Option Alpha. You can set that up traditionally like this too, but a traditional trailing stop would work like this, right? And this left side here, this is you call it your percentage of profit, your percentage of credit, capture, whatever, return, it doesn't matter, just like how much of the premium are you capturing on a position or how much return are you capturing on that position. So you might have this position, which, and for all intents and purposes, could start really, really good, right? It never went to zero and it starts gaining some momentum and gaining some value, right? And you've got this traditional 10% trailing stop that's associated with it. So traditional trailing stop is going to follow it the whole time that it's moving. And the reason that people like a trailing stop is because it's protecting their position. The downside to a trailing stop is what would happen if the position just immediately turned back around and went the opposite direction? Well, you're going to get knocked out pretty fast with your trailing stop, right? Now, is your trailing stop maybe going to protect you from losing more? Of course, it could protect you from losing more. But the problem with a trailing stop sometimes is that a trailing stop, when it's initiated right away on a position, is that it doesn't give the position room to start to mature. I don't know what other way to say it. It's like if you have a kid that's trying to walk and they start fumbling, it's like knocking their feet out below them. And you're just like, look, that's it. You're done. You're never walking again. You kind of got a little woozy there in the beginning and you just got to cut their feet out, right? With most trailing stops, they turn into market orders on some places. So you don't have a lot of control on them. They're kind of right there behind you, but they kind of sometimes knock you out at the same time. Now, this is not all trailing stops, but that's kind of the concept around it, is you don't really give the position opportunity to mature, to really like develop, further into its cycle, right? And I always tell people, like, look, if you can't handle like a 10% or 5% kind of wiggle room in the position, maybe it's not the right position. Maybe you should be looking at something else, right? So that's how a traditional trailing stop works. And the problem again with the trailing stop is maybe you potentially miss this opportunity due to an early close. So that's how traditional trailing stops work. Now, when it comes to smart stops or trailing stops, the way that we do it here at Option Alpha is we give you the ability to set a target. So the target is super, super important. And once that target is achieved, then the trailing stop kicks in. So I'll say this again. Once the target has been achieved or reached, then the trailing stop kicks in. So in this example here, we might first say that we don't want to start trailing the position until it reaches a 50% target. So all that wiggle room in the beginning, don't do anything with that. Don't even think about it. Just close your eyes. Don't even look at it until the position first reaches a 50% target. And look, the idea around this is it's not that you don't care about doing a trailing stop early or you have to use them later. It's that once the position has matured to a point at which you're like, okay, I think I'm ready. I think I can probably take on, take some profits here, but I want to give the position room to run a little bit. That's what you want to do. You want to give the position room to run. So once it reaches that 50% target, here on the chart, that is where the trailing stop gets triggered. And when the trailing stop gets triggered, then it starts trailing from that point moving forward. So then it starts trailing. You could set your target at 30%. So if it triggered at 30%, then it would start doing its little trailing stop, right? It would start doing its trailing stop at 30%, and it would get triggered at that level. So it gives you an opportunity to not use a trailing stop right from the start if you don't want to, or to use a trailing stop later in the process if you want to, so that you have the opportunity to capture more premium. If the position is going really, really well and continues to go up in value, maybe you capture some additional premium. So here's the deal. Once we start going through these, here's one other scenario. And I just wanted to throw this one out there because I think it's powerful, because this is how I'm going to do it for mine moving forward. So here's the other scenario. The other scenario is that you combine these trailing stops with a profit target. And this, I think, is the ultimate thing that you could do with smart stops and with exit options and trailing stops, is you don't just use it once. You don't just use trailing stops. You also use a profit target, what I traditionally refer to, or you guys might have seen me say, as an absolute profit target. There's got to be a point at which you are absolutely, emphatically 100% out of the trade if it gets to that point. You could say it's 99%, right? If you capture 99% of the premium you were going to take in, wouldn't you get out of the trade if it's 10 days or 50 days before expiration? Of course you would, right? There has to be a point at which you say, I want to capture whatever premium. That's my point where I get out no matter what. No stop loss, no trailing stop, no whatever, right? I just want to get out. So to me, this is what we're going to refer to for the rest of the day as basically like our profit target or our absolute profit target. When you combine these with your trailing stop, what you do is you give yourself the opportunity to now start to focus and narrow the range of possible outcomes for that potential position. You're still leaving room for the position to grow to that absolute profit target, while at the same time you're protecting it in case the position starts to turn around. It's actually really, really fascinating to do that. So in this case, our absolute profit target might be up here at, say, 65%. So if the position ever gets to 65% captured premium, we're going to take it off no matter what. But we're going to start the trailing stop at 50% and trail it by 10%. So we could get anywhere between a 40 and a 60% return on the position once we start trailing that position moving forward. When you combine these two things together, that's where you really get a lot of power out of using this. Is you give it your absolute profit target, the one you'll get out no matter what, and then you combine that with a trailing stop and say, look, at this point, I want you to start monitoring it and start capturing, watching the position as it goes. All right, so here's what we're going to do. We're going to go through these, and then I'll come back and we'll do some slides on bid-ask spreads. So let me switch over to my screen here. This is just a demo trailing stop bot. And what I did today is I just simply entered a bunch of random positions. There was no logic in this. There's no, what I mean by this is there was no, I want to do this position versus that position. Now, I just did a bunch of different tickers because I wanted to see some things move. So I did call spreads, long call spreads, short call spreads, whatever, it doesn't matter. I did it all just to get some positions in so that we had some things to look at. Here's what I want to look at. I want to look at individual positions so that we can start to look at how these trailing stops works. Okay, so here's the first one. This is a short put spread on SPY. So this is an out of the money short put spread, 36 days to go till expiration. Currently the position, we sold the position here. You can see the trade price. We sold it for $338, and right now it's trading at $259, and you can see it's updating in real time as we go. Do you guys like that little update, by the way? You don't have to hit the little refresh button as you go. So right now this thing has absolutely no exit options. So now down here where your exit options are, and I'll show you later on if you don't know how to at the end, how you can set these inside of your automations. But right now, this thing has no exit options. You can set exit options when you enter a trade manually. You can set it automated, doesn't matter. So I'll just do it here because it's very easy to do. So here inside of exit options, I can of course set my profit taking level, right? So that's that first one that we kind of just went through on the last slide, where I can say, look, if this position ever gets to 50% of its credit, take the position off. This is what I would call the absolute profit taking level, the level at which if it gets to that level, you will take a profit immediately. Now what we're going to do is we're going to set a trailing stop. Now, when we set the trailing stop, we have two things that we have to set. These two things are the things we are absolutely required to set. You have to set an activation, so a target, a point at which it gets activated, and then you have to set a pullback or a trail. Now, we use words that we think are a lot more intuitive than something like what we used to, which was like target and trail. Instead, we try to write it out for you, like activate the trailing stop at, in this case, we would activate it at 50% of the credit, and we would close on a 10% pullback in the position. Forget the optional ones, which we'll go through later on. The optional ones here, that's it. You just need to do those required ones first, and then you go ahead and apply those. So here's what our position looks like. We have a 65% absolute profit taking level, and then we've got a 50% target or activation of the trailing stop, followed by a 10% trail or pullback. So that's exactly what we just went through in that screenshot. So in this screenshot, let me go back one so you guys can see. Oh, this one right here, 65%, and then 50% target. And once you reach that 50% target, you're going to activate it, and it's going to trail it by 10%. So here, what we're going to do is we're going to set these, forget all the other options for now, right? Forget all the other options for now. We're going to go ahead and set these for the position. Now, immediately when I set these, then what you see, of course, is you see them start to work right here. And then you start to see some information here on what is the current values of those exit options that you're looking at. So notice here on the left-hand or on the right-hand side, your profit taking is when the position reaches 65% of credit. Well, right now, the highest point that it's ever reached is 23.4%, which was 6 minutes ago. Now remember, exit options are checking every minute that this position is open. It's checking and it's watching the position. Now, little prices are updated in like real time every couple seconds they're updated, but it's checking every 1 minute. Hey, do I meet this? 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 So this is the last time, this is the highest point it's ever been. So has it ever gotten to 65%? No, it has not ever gotten to that. Now, if you look at the trailing stop here as well, what you'll see on the trailing stop is that it's waiting to activate. Hasn't reached 50% of the credit yet, right? Because the high has only been 23.4. So it's not going to do anything. So could the position, now here's the thing, right? And this is just full disclosure so you guys know, there's no stop loss on this. So could the position turn around and go all the way back the opposite direction and you've got nothing here to catch that? Yes, it can, right? You don't have a stop loss, which I don't use them, by the way. I don't use stop losses. You might, I know a lot of people do, but you don't have a stop loss, so it's not catching anything because it hasn't activated yet. Now let's go through a couple of scenarios. I'm going to deliberately try to trip you guys up just a little bit. I'm going to challenge your assumptions here. What if I did this? What would happen if I changed the profit taking to 50% and my trailing stop was set to activate at 50 with a trail at 10%? What would happen in that scenario? The stock or the position goes up to a 50% profit, and what's it going to do? It's going to close it out because any of these exit options being met would trigger a closing order. And so for that reason, if you set any of your profit taking levels below your trailing stop target like this will always trigger before the trailing stop ever has a chance. I'm just showing you how it works because again, any of these exit options being hit is going to trigger a close. So if the profit target gets to 30%, boom, you're out, done. See ya, out of there, right? The trailing stop never had a chance to activate because it never got to that point. When I go back in here, let's try a different example, but let's use more of a live real-time example. Let's actually trigger it right now, okay? If we can trigger it right now, let's trigger it right now and see if we can get it working. So let's go in here. Let's set our profit taking at 65%. That's fine, right? That's not going to get hit. But let's set our trailing stop to activate at 22%. And let's do a 10% pullback from 22. So let's activate it at 22. I think the premium was around 23% of credit right now. And let's go ahead and set it at 22% of credit with a 10% pullback. And if I do that, what it's going to do is it should, because the high was over the 22% target, it should trigger the trailing stop to start trailing the position. And it will start trailing the position from that point. Now, really quickly in here, when you have your trailing stop, of course, like all the other different ways you can exit using exit options, you can set how the orders start going over to the market. So you can say, look, if I hit a trailing stop, I want to use fast, smart pricing, right? And I want to use 100% of the bid-ask spread. We'll go through the bid-ask spread, slippage, and guards here in a little bit, but let's just say you do, right? You want to use 100% of the bid-ask spread fast. But when you're taking profits, you want to do patient, smart pricing. Because if you've got a big, fat, healthy profit, maybe you want to, let's really try to take as much premium in here. So you can use either one of, you can always set exactly under what scenarios those orders go over to your broker. So let's say we do that and we go ahead and save here. And what that's going to do is it's going to immediately start trailing that. Now you see here that our high was 23, which was over our target. So what does it say right here? It says target hit. So right now the verbiage is a little bit changed, right? And this is what we're trying to do. We're trying to, the dev team, like Jack and Rob and Matt, these guys do a good job of making it just regular verbiage for you guys. Not like all these crazy terminologies, like target hit. Yes, we know that the target that we are looking at, the target has been reached. It is achieved. The position high at any point was higher than what we needed. So now it's trailing by what amount? Now, the cool thing is right here is that you can see that trail amount, it's starting to move as the position gets updated. You see how it just moved? It was 0, now it's 0.3. The position trails the high by 0.3. If it's 0, what does that mean? It means that it's continuing to move up. It's continuing to inch that thing up, right? So now it's adjusting. It's going to adjust it. If it's negative, it means that it's moving higher. So on the next 1 minute interval, it'll adjust it higher. So as the position starts to move and starts to increase beyond the 23% return that it's at right now, it'll start moving and adjusting that trail as high up as it needs to go. So let's let this position sit here for a little bit. I have no idea if it's going to turn around, but let's go to a different example. We'll come back to this one if we need to. So all we do is just exit out of here. It's all good to go. We don't have to do anything. All right, so here's another one. Let me go to one that actually closed so we can look at one that closed. So here's one that closed earlier today. This was May, earlier today. I just opened it and then it closed at 9:52 this morning, okay? But here's what happened. I had set the position as 50% profit, and I had the high that it ever got to was 20.4%. So did it ever reach our ultimate profit taking level? So in this case, did the position ever get to a 50% profit? No, the high was just 20%, right? Okay, and that high happened 4 hours ago. But what I did is I said, hey, look, here's what we're going to do. We're going to start a trailing stop at 10%. When I've captured 10% of the credit, then what I want to do, or the premium, I think in this case it was a long call spread. So when I've captured 10% return on the debit spread that I paid, then I want you to start trailing it by 5%. And look what happened. The target was hit. And then it at some point trailed by 6.1%, just how pricing was moving. The next pricing that got published basically was trailing at 6.1, which was beyond the 5% that we had looked at. So what did it do? It reversed that position and it started to fill the position and get out of the trade. So you can see that here inside the trade details, it says that a trailing stop, it reversed 5.7. That was the first time it reversed 5.7 from a high of 20.4, which was more than 5%, which was the variance that we gave it. So once the position started working, it triggered at 10%, but it actually started moving up and gave it the ability to run a little bit further beyond a 10% return. That the position actually had a 14% return when you factor in and round all the little edges from the position closing. The position had a return of 14%. Remember, our trailing stop was set at 10%. So at 10%, it started trailing. And then at some point it came back enough that we said, hey, we want to get this position off. And it closed at 14%. What's the difference here? That might have updated while the prices were updating and it further trailed the high. But as soon as it trailed anything below the 5%, like anything beyond the 5%, then orders started filling. But yeah, you want to set these to reasonable levels. Now remember, you might have a little bit of a difference because of just the rounding of contracts. So some contracts might be $2 in price, like $2 in spread or $3 in spread. So you might not get out of that position at exactly the 5%. It's just how it's triggered to start sending orders. So factor that in for your trades. If you're going to trigger a trade, trigger a close at 5%, but then you give it the ability to go 100% of the bid-ask spread, well, you might get out with a 6% loss or 5.2% loss because of how the pricing works. Here's this one. This one was no profit taking. I'm just going through a lot of examples so you guys can see it. This one was no profit taking, was a really tight target of 5%. And then the target was hit, right? The target was hit because the high at some point was 6.5%. 6.5% was the high. So that, of course, was above the 5% target that got hit. And we said trail it by 1%. Now, this is the reason that I added these crazy ones in here. I don't even know what this one is. Is this DraftKings? The reason I added this one is because sometimes, even though you have a 1% trail, this is a very specific example I wanted to make sure we had in here. Even though you have a 1% trail, does not mean that prices move nice and beautifully in the market, and they all move 1% at a time, and it's 1%, 1%, 1%, 1%, 1%, 1%. Pricing for all options and markets in general can jump. It should be apparent. You could be up $10 and the next block of trades come through and you're down $25, right? Now, the more liquid the security, the less likely that is to happen. But the less liquid the security is, the more likely it is to happen that you have these jumps. So what happened in this case is that the target got hit, and then the next thing that happened was it started trailing by 9.7. And that's just like the last trailing amount that it had. It was a big difference between one. One was just the threshold, but the next price jumped under that pretty considerably. So what it tried to do is it tried to reverse the position. And here's the details. The trailing stop, the stock reversed, or the position reversed 3.2%, right? At the time that orders started flowing, which was more than 1% from a high of 6.5. That was the high. That's what it should do. It should have started reversing trades from that high. So you can see that it's actually looking at that high. And then the second that it gets under that position, when it's checking, the second it gets under that trail, then it's going to start sending orders to close out the position. So target and trail. If it's under the trail, it starts closing the trade. Here's another example. Let's look at this one. This one had a 60% profit taking. Did it ever get there? No. Then I had a 20% target. Did it get to the 20% target? Yes, it hit the target. And then it was trailing at any point at the last time it recorded at 7.2. Reversed the trade because it had a high of 25.2 and reversed 6.3. Is 6.3 greater than 1%? Yes. So then it reversed the trade and it closed out the position. Just too tight of a position, too wide, too big. And of course, you can go in here and you can see how the orders were sent over, right? Notice this one, this was really, really wide. And this is why these are just so jumpy. And this is why, and then we'll start talking about bid-ask guards and stuff like this. But you can see how jumpy it is that it's these positions like PGR. I don't know, what is PGR? I just typed in random stuff, progressive, right? This one was really, really jumpy because the profit targets were jumping, or the trails were jumping all over the place. We had a 1% trail on this, but it jumped 7, 6, like it was all over the place. And the reason it was all over the place was because it was not that liquid, right? It's not that liquid. The bid-ask spread when we were going to close it was 25 to 155. So basically what you're asking the bot to do is like try anything in there, right? There's no bid-ask spread guard. There's no nothing. So you're telling the bot, look, I think the pricing is in there and it's jumping all over the place. Try to fill it. And you can see the range of prices that you gave the bot to try here. And it did get filled at a better one, but it's still way too wide. All right, good. So what we're going to do is we're going to switch gears just for a second and we'll come back to trailing stops. Because what I want to do is I want to talk about what we just started talking about, which is this idea that not only can illiquid securities have really wide spreads, which make it hard for anything to adjust and to determine like what is the right price. On that last example I showed you guys, if the bid is 25 and the ask is 155, what is the right price? Mid price is somewhere in between there, but that doesn't mean it's the right price or whatever. So if you have really, really wide spreads, it makes things a lot more complicated. And it might also trigger a close or a trail or a stop or a trailing stop just because the spreads are widening as they go. So here's what we came up with, is we came up with the ability to guard against bid-ask spreads. And the reason that we want to guard against bid-ask spreads is because if you're trading something fairly liquid, you will still have times during the day, during any trading day, when the spreads just go like this. Watch my hands on the screen. Can you guys see me, right? Where the spreads are nice and tight. And then just like an accordion, they go like this. They go whoop, and they widen out, and then they just come back, right? There's no rhyme or reason. It's just wide pricing for that time period, right? Could last a couple seconds, could last a minute, but pricing just goes woo, really wide, and then comes back in. And what we don't want is we don't want that really wide pricing, that accordion pricing that will happen to trigger, to like touch something that we're trailing or using as a stop. So once you have your position, you can set a guard that will basically ignore those accordion really wide spikes in the bid-ask spread. If you're looking at this is just an example from one of our blog posts on bid-ask spread expectations, where we actually charted the bid-ask spread for a lot of securities over a couple of days. This was just SPY last year. It doesn't matter. I could use another day. You would see the same thing. It doesn't matter. This was SPY. Look at the bid-ask spread, how most of the time it's below 3. But then you have these monster spikes. And these are monster spikes going from 1 to 5, or I mean, that's a 100% move in the bid-ask spread in a blip of a second. And you can see they happen a lot. Like there's a lot of just random spikes throughout the day where the bid-ask spread just goes, hey, I just want to go wider for a little bit. The vast majority of time it's under, call it 3, right? On the bid-ask on SPY for this example. So in this case, what happens is the bid-ask spread goes really, really wide and then it contracts. And then it goes wide and then it contracts. And what we want to do is we want to ignore these really wide days. We want to ignore these wide days. Wide days. Here's another example. This is with Tesla this time, same day range that we used in our study. But look at what happened with Tesla. This is how different they could be. So let's say the average bid-ask spread in Tesla for these strikes was 25 cents. That was right here. You had some spikes of up $1 randomly, upwards of $1 spike on one contract. So now start trading. Now think about this for a second. I'm really going to challenge you guys to think about this. Challenge yourself to think about how bid-ask spreads can be volatile. It could be $1 on one strike. That was just the 585 put strike. That was it. Now, if you're trading a call spread or an iron butterfly or an iron condor, now you start combining all these bid-ask spreads together into your overall position. And you can see how much variability you would see in the day for positions. In this case, it's looking at the option that's at that strike for this example. In our example, when we use the bid-ask spread, which I'll show you, it's looking at the spread of the position, not any individual leg. All right, so does that conceptually, you guys understand conceptually what we're trying to do? We're trying to shave and ignore these wide spikes so that we don't start placing orders when the market's wide. That's one. But then we also are not tracking or trailing some abnormal one-off price that happens. We don't want to track those. If it's a out of bounds price, we don't want to get fooled into making a trade or triggering a stop just because of one random bid price that got triggered during the day. So here's what we're going to do. In this case, what we're going to do, and this is the short SPY position, what we're going to do is we are going to add to our trailing stop, to our exit options, a bid-ask spread guard. And that's right down here on the bottom. Okay, it's this new little box here, new little box. And the bid-ask spread guard here is going to disable the exit options only temporarily. Hear me out on this. Only temporarily for any bid-ask spread that exceeds a certain amount. So if the spread gets wide, ignore it. That's basically what happens. If you get a temporarily wide spread during the day, don't track it. It's not a real high. It may not be a real low, right? It may be a false signal where it just goes wide and then comes back down. So we want to disable it. And that's what we're going to do. This type of technology is bananas valuable to you as a trader because what did you do before? Just hope that it was in the mid price? So what you want to do is you want to disable this if the bid-ask spread exceeds a certain amount. So in this case, let's just start with something really, really wide. Maybe for SPY, maybe really wide is 20 cents. So if I save this now, what it's going to do is it's going to add the bid-ask spread guard to my exit options. And then of course, it's going to show me what the bid-ask spread is currently for this position. This position, not any strike, this position, because that's the position that we have to send orders to get out of the position. So currently, the position is anywhere between 2 and 3 cents. So if it's currently at 0.2, 0.3, right, it's underneath our target of 20 cents. So that's fine. That means all of this stuff will work. It'll track targets, it'll track highs, it'll track lows, it'll track all that. But if we ever were to adjust it down to a really aggressive level, which I wouldn't do this, but I'm just doing it so you guys can see this, then what it would do is it would turn red. And now what you're going to understand is that it's not actually factoring in any pricing right now. Any changes in pricing, it's not going to factor in because the bid-ask spread is out of bounds. Now, I set our boundary the lowest it could possibly be at a penny. So of course it's out of bounds here, but it's not going to trigger any closing orders. It's not going to do anything because the bid-ask spread is out of bounds. So it would only trigger exit options if the bid-ask spread is within our range and the targets have been hit at the same time during that range. So in this case, even if it went to arbitrarily 65 profit taking, it's not going to send the orders because our bid-ask spread is outside of our range. And our guys were pretty clever and they created this to be a little red so you knew exactly which ones were inside and outside the range just visually. So let me move this back here. We'll move this to something like 10. Okay, something, give it a little bit of room and then it can go. So now you can see it's within our range. We're starting to do the trailing, so on and so on. This position has gone up in value. We're still not closing. Remember, earlier was 23%. Now it's gone up to 24. Now it's up to 25. Now it's up to 26, right? So now it's continuing to move up. We're continuing to lock in some profits after the trail has been triggered. Now what we're going to do is we're going to look at a different one that has a really wide spread. Okay, so let's look at Tesla in this case. And you can see Tesla, look how much Tesla will change. And just sit here for a second and watch this. Tesla will go, in many cases, from 5 cents, 7 cents to 20, 30, 40, 50 cents. It can really change during the day. It went from 7 to 13, so it basically doubled. And I don't know if it'll do it right here, but you'll watch positions, and sometimes the positions will literally go 12, 13, 52, and then come back down, and you're like, what the heck is going on? But the bid-ask spread guards from those erratic movements in the underlying price. Here, let's go to some other ones like Netflix. Okay, Netflix is currently at 20. Now it's at 21, so it's stopped tracking everything. If it comes back inside 20 at the next interval that we're checking, then it would start tracking and start waiting for it to activate a high or track a low or track new pricing. So it's pretty cool that it's actually doing this and just going, okay, I'm going to ignore that price and I'm going to use this price. I'm going to ignore that price and I'm going to use this price. And now you can see it's currently at 20. So that's good. Now it's tracking it. It's right there. So you can see actually what it is. Let's look at some other ones. Here, this one doesn't have one. I don't know what this one will be. So let's set it at something like 10. Say your bid-ask spread, and it's currently at 7. Okay, good. So it's not out of bounds. I don't know what this one is, Marathon. Yep, you could set it really low. Currently it's at 4. So that's how they kind of work. Okay, that's on the bid-ask spread guard. That's for tracking purposes. So let's do one other thing that you can do inside of your exit options, which is you can, now that you're tracking it and you're just like, look, I don't want to track these weird anomaly prices. What you can also do is when you send orders to your broker, you can also protect against those really wide spreads by using slippage from the mid. This is a really new one that we added in the new recent update, but you can use slippage from the mid. That's really fun. So here's what you can do. Let's say you actually do have a trailing stop that gets hit. Usually what you could have done inside of smart pricing, and this is what you did from before, is you would say, look, I'm going to allow the smart pricing to go 100% of the bid-ask spread, right? That's what everyone did, right? And we all had these decision recipes like check and make sure the bid-ask spread is less than blah, 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 and check and make sure it's less than whatever. Well, now with disabled exit options, that also helps ensure that it's within that range. But if it ever does get outside of that range as it's working through the orders, what you can do now is you can say, look, I only want to go 3 cents from the mid price. So here's how this works, right? If you have a bid-ask spread, let's say that's 0.50, okay, that's 50, that's one side. And then the other side is $1. Your bid-ask spread is how much? 50 cents. So if you have a bid-ask spread that's 50 cents on one side and $1, the spread is 50 cents. The mid price is 75 cents. So the mid price between those two is 75. That's the mid price, the middle price between those two. If I told the bot that it could do 100% of the bid-ask spread, I gave it the full range of choices, all the way, either way, up or down. If I told the bot that it could only do 3 cents from the mid price, my new ranges are what? It would go 3 cents this way to 72, and it would go 3 cents this way to 78. That's it. So what it's going to do now is that even if the spread widens to 50 cents wide, stays right in that range. If the spread goes from 0, and sometimes you'll get stocks that do this during the day, like there's tons of posts in the community where people are like, what happened? And I'm like, well, your spread went from 0. The spread was 0 to 425. Like if it was 0, right, up to $1.50 and the spread widened from 0 to $1.50, mid is still 75 and still going to work right around that mid. So the cool thing about using this with your orders is that now if you don't want to, you don't have to use a percentage of the bid-ask spread. You could use a slippage amount. You could say, look, I want to do slippage up to 3 cents from the mid. So disable exit options if they're more than 10 cents. And then if you get to a trailing stop, use slippage that's 3% of the mid or 3 cents off the mid. That's it. That's so much control. I mean, you're really pinpointing exactly how you want orders to flow, under what conditions, what you track, what you don't track, crazy stuff. All right, let's keep going. We'll get a little bit more advanced. First of all, I want to start filling this trade because I just want this trade to go through. So I'm going to adjust this to fill. All right, so here's what I'm going to do on this one. I am going to set the trailing stop so that hopefully it gets hit. Okay, it's at 26% right now. I'm going to set the trailing stop to 25. I'm going to do it from 25 with a 1% pullback, okay? I think it'll probably get hit, or let's do a 2% pullback. And let's go ahead and do that. And it's right now 25. It hasn't tracked anything yet because I just reset it, but notice you can reset it on the fly. I want to see if this thing gets hit because I want it to start sending orders to close. So you guys can see how the position is now active and active and active, right? At some point, the position is going to close and you're going to have this trail be hit. And then I want you to start seeing how the orders are going to start flowing. Now, you probably won't be in front of your screen watching it, right? Because you don't need to. You can let exit options do whatever they do, right? But if you did need to, then you could go here and, watch how these things get set and watch how they get sent. Okay, so I'm going to force this thing in here to get closed. This should close the position on any little pullback here, and we'll watch this thing happen as we go through. So I'm going to trigger this really fast. Okay, it's going to happen fast because I'm going to give it like a bigger pullback. So as soon as it starts tracking this, it'll start sending orders. Okay. So here it's going to trail when the next track comes over in the next whatever minute, whatever that interval is, it's going to be trailing by more than, I need to move down the high. So I'll do the high as 20%. I'm just going to trigger it to go so you guys can see how it goes, okay? So this is way more. I said trigger it by a high of 20, and then it's got a trail. I think I just didn't give it. Let me do 25. We did 20, and trigger it by, I just need to keep it at a 1% pullback. All right, so let's do this. Instead of watching these, at some point, this thing is going to get hit. I wish I could make these trades all day that just never actually get hit with their profit targets and just keep accumulating profits. At some point, this thing's going to turn back around, right? So here's what we're going to do. We're going to go in here. We're going to mess with the exit options a bit more. Let me go to a different one here. Let's go to one that's up a little bit of money. So this is the Netflix call spread position. And what we're going to do here is we're going to set something else besides our regular exit options or the regular trailing stops. Is we're going to set here the additional ways that you can disable trailing stops. So if you didn't think that it was powerful enough, there's also other ways that you can disable the trailing stop. Most of these are a aim, and the goal of these is not send orders without it meeting your specific conditions. And this really is an attempt to help you all protect yourselves against those wide, really fast moving markets, where what you don't want is you don't want an order to get triggered and then get filled really, 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 really bad because it was just triggered and it just got sent over. So in this case, let's look at this one together. This one says activate a trailing stop at 15% return. These are all smart stops. We call them smart stops. They're trailing stops. You guys just happen to use the word trailing stop a lot more, so we use that. But we call it smart stops too. Activate at a 15% return and close on a 3% pullback. What I've also done, and notice these are optional, which means you do not have to do them unless you want to. The optional ones I've told it to disable trailing stops if the return is less than 12%. So basically what I want to do is I want to ensure that if some erroneous pricing comes over, and the erroneous pricing is within my bid-ask spread guard. Maybe the spread of the position is within my bid-ask spread guard, but the market moves so fast in the opposite direction. The market was just going like this, and then boom, the market moved so fast that it went beyond my 3% pullback. But it went so far beyond my 3% pullback that I don't actually want to introduce the trailing stop. I don't want to take that big of a loss. And a lot of people like this. A lot of people requested stuff like this where it's like, look, I'm willing to take the 3% or 3 to 4% pullback, but if we have this ginormous move lower, I don't want to take the trailing stop loss. I'd rather use something else. I'd rather use a monitor to notify me that the position, had a big move or whatever. So what you can do here is you can disable it if the return is less than 12%, right? If the return is less than 12%, which means it will not send orders unless the return is greater than 12%. That's kind of like your lowest boundary threshold that you're willing to accept. So you say, look, I want to activate it at 15%, give it a 3% cushion to move, but disable trailing stops, don't send orders if it's less than 12%. That's my lowest acceptable boundary. If I have anything less than 12%, don't start doing it. The return could be negative. I'm still not going to do it. But that's up to you. That's why it's optional. You can use it or you cannot. Some people, they want to use it to control like really wide market moves that they are willing to let come back up. And then you can say, these are all optional, so you can use either or both, or disable exit options if the pullback is more than 5% from the high. So if you get, like in this scenario on the left-hand side, where you get the stock chart that's moving up, and then some event happens, Fed, whatever, and you get a 5% snapback in the stock price of your position, disable exit options for right now, which basically means like I maybe think that it might come back up and then I'll retake the profits when it comes back into that range, which that's what it would do. So that's what you have. You have these extra controls. Now, can you do this? Can you set your return less than 18%? Logically, you could think about doing that, but that really wouldn't work here because you need that minimum return to be less than this, less that. So 15 minus 3 is 12. This thing has to be lower than 12 because that's the first like roadblock you're going to have. It can trigger right at that first pullback, but it's only going to trade that 3% pullback, nothing more than that 3% pullback. So what you might want to do when you set these up, like let's set up an example one here. You could say something like this, 30%, 5% pullback, minimum return is 20%, or if the pullback is more than 10% from the high, like the security is more than 10% from the high. That's what I want to use. So that's the whole setup. Your absolute profit target, your activation for your trailing stop, trails it by a 5% pullback. If it does pull back 5%, ensure that I have at least a 20% return first. So I've got to have a 25% return, a 22% return, a 21% return, a 23% return. If the pricing right now is such that I have an 18% return, do not send orders to my broker. Don't start sending orders to my broker, right? Because I don't want those orders to go over there. I need my 20% return before I can keep doing anything. So that's how you would do it. And then again, in here, you could say, and when you send those orders, fast pricing and use fast pricing and slippage 3 pennies from the mid. What was the 10% part on that example? The 10% was, or if the pullback is 10% or more from the high. So if the high is 50 and then it pulls back to 38, right, which is more than 10%, disable exit options, don't trigger exit options. And these are all on option premiums, not the underlying security. So the more liquid your position, the smoother those movements are going to be. The less liquid you're trading stuff, which is okay, you can, this is what helps you set those boundaries and guardrails. So do you have to use these ones? No, you don't. You can remove those. Just use your regular trailing stop, the one that we went through the whole time. Okay, you do not have to use those. It is totally up to you to use those. Okay, did my short put spread position get closed? Yes, it did. Okay, so if I go down here to my short put spread, you can see what happened. The high was 26.3. It reversed. I said it could reverse what? 1%. And then the reversal was actually 1.2% because just how the pricing worked. And then I said, okay, you can start sending orders. And yeah, I gave it what? 3 pennies from the mid price. Do you guys remember that? That's what I filled in. I said you can do 3 pennies from the mid price if that order goes over. What did it try? 1, 2, 3 pennies from the mid price, and it got me out at 254. So that's exactly how it's supposed to work. It tracks the high. When it hit the trail, it reversed 1.2%, which was above my 1%. Then it starts sending orders exactly how I wanted to send orders, which was 3. I allowed it to go 3 pennies from the mid. That's what it did. It tried mid, 1, 2, 3, like 3 cents from the mid, done. So that's what it's trying, is allowing to go that far. That's pretty cool. And I took a position which maybe I was going to take, maybe I would have had a 20% profit on this one. And I allowed it to get to the point of making a 24% return on this position because I gave it some wiggle room and some ability to move, all within my boundaries and whatever you wanted, whatever that was, right? And I avoided, with the bid-ask spread, any erroneous positions, any erroneous pricing and whipsawing. It did probably helped out a lot that I was trading SPY too, right? But it worked exactly how we wanted it to work. What I want to do is I want to show you how to save presets and how to set these automatically inside your bots. This is how I think you should be using them inside of your bots, is to set them automatically. Set them automatically inside of your positions. So if you have, for example, the cherry picker. So here's the cherry picker. There's a live bot that I'm running, and you have the ability to get into any open position. See any open position? You can set your exit options to attach to that open position the second that open position is open. So inside here, I'm telling my bot, hey, check all these things, bing, bang, boop. And if I get to this point, open a short call spread. And here is where I can set my exit options for that short call spread. So I'm going to set my exit options. I'm going to say, all right, profit taking, 50% of credit, and send the orders using patient, smart pricing. If I've got a big fat credit, a big fat profit, take your time and start sending orders over using patient, smart pricing. Follow me on this, please. This is it right here, how you set these up. Then you set a trailing stop if you want to. Activate a trailing stop at 30% of credit and give it a 7% pullback. I'm just using numbers to make it work, but whatever works for you guys. Give it some room. Like, I wouldn't do a trailing stop at 1 personally. That's just too tight. Like, it really is too tight. You might as well just close it at 30% of credit. Instead, give it a little bit of room, 5, 7, something in there. So I'll use just the normal ones there. And then I'll go ahead and set my expiration one. I'll say close it an hour before expiration. Oh, and if it hits a trailing stop, you can go up to 5 cents of the mid price. And if it hits the expiration, I want to give it a little bit more room to go because it's expiration. So I'll let it go 10 cents from the mid price at expiration and disable exit options if it ever goes wider than 10 cents for tracking. Okay, great. That's all my exit options. I basically have controlled profit taking, trailing stops, right? Expiration. I really have managed the entire position here, done. I've avoided any anomalies in pricing with the bid-ask spread guard. It's in one place. So now what I can do, and this is the most powerful thing, don't have to reset these over and over again. So what you can do is you can save this as a preset. I can say Kirk's cherry picker for short calls, all spreads, whatever. I don't care what you call it. I can save all of these settings, everything. And I save this as a preset. And now I'm done. So I have all of my exit options and I'm here and I save it. Now it's attached to this open position action, right? I'm just opening and closing this so you can see it. And now what I'm going to do is, I have another open position action. It's a short call spread. No exit option set on this. So what do? I go in here to my presets. Kirk's cherry picker for short call spreads is now a choice. Do I have to reset everything? I don't have to reset everything. I can go in here and just select that. Now all of my settings are saved and I just save and that's it. And it's saved. So any short call spread that I use, I can go in and set all of my super duper awesome exit options all the way down for everything, just using presets. So set them once, name them whatever the heck you want to name them, your choice, and then reuse them over and over and over again. You can set them manually inside your automations to set them automatically when you start making your trades, right? So that any of your cherry picking opportunities have those options into them. You can also, if you want to, go into your monitor automations and you can adjust or reset exit options at any time. Now we're going to do another workshop on this. I don't think maybe it's the next one, maybe it's the one after that, but you can go in and you can adjust any of your exit options on the fly. You can say, hey, repeat through each short call spread position, and I'll proceed this with Let me collapse these because I can collapse all these. You guys can see this, right? Repeat through each short call spread position and update the exit options for every position. Is it a credit position? Like, is it a short call spread, long call? Like, I have to choose because I have to know what type of options I'm adjusting, exit options. Yep, it's credit. And I'm going to reset all of my short call spread positions to these exit options, my presets that I have in here, and then save. And that's it. And so the next time this automation runs, this monitor, it will set my exit options across the board for everything. You can reset them at different points. This is one of the most powerful things I think we'll be able to do. And I think you maybe start thinking about doing is like, if the market is in an uptrend, use these exit options. If the market's in a downtrend, use these exit options. If your position is 50 days from expiration, use these exit options. If it's 10 days from expiration, use these exit options. Like, you can really do some pretty cool stuff by setting those exit options on the fly as you go. So you can put the update action any place in here and update a single position, update all positions. It doesn't matter. I'm going to take these out because I don't want to mess with my position after I start running this thing. Let me go back here to the trailing stop demo. Any other positions get triggered? No? Okay, good. Let's try to trigger some of these. All right, so this is a 21% return. I just want you guys to see how it's going to work as it starts to go. So we'll do a 15% and we'll do 1% pullback. We'll just start sending orders. We'll start sending orders 0.01 from the mid, like right at the mid price. Let's see if it trails. So if this thing ever pulls back just even the slightest little bit, because I set the target at 15, so it's already hit since the high is at 21. If it pulls back even the slightest little mini amount, then it'll be done. Closing the position, couple pennies here from mid. Did I save that? I think I did save it to do a couple pennies from mid. It's just trying a couple different prices. The mid's a little bit wider. And you're filled. Right there. 77, done and out. Right there. Just happened right where we were doing it. Pulled back 1.1%. So you can set them really tight if you want to play around with them. I know this was a little bit of actually it wasn't too long today. We went a little over an hour, but I hope it was really helpful to go through a lot of these examples. I know we hit it pretty hard here with some of these bid-ask spread examples and the trails and the targets, but look, it's really fun to start messing with this. Please mess around with it on paper trading, start to get to know it, and make sure that you understand how the trails and targets work, but it's really, really fun to combine these with other exit options. It just makes it a lot easier to use. All right, so we'll wrap that up here. Thank you guys so much for being here. As always, please help us out by telling other people about Option Alpha. Please share Option Alpha with your friends. Share us on social media. Bring a trader into the community with you. Obviously, they can come in and try things out for 30 days. It's crazy. And then if you connect with Tradier, you can trade at our highest level for free, essentially. So bring some friends in, help us kind of spread the word about what we're doing here. Okay. All right. Thank you guys so much for being here. As always, have a great rest of your week. Until next time, happy trading. Take care.